First-time buyers in 2025, unlocking the ladder in a shifting market. Let's be honest. If you're trying to get on the property ladder in 2025, you deserve a medal, or at least a very strong cup of tea. Back in the early 2000s, things were simpler. Well, kind of. You saw a place, called the estate agent, made an offer, and Bob's your uncle. Fast forward to today, and we've got fluctuating interest rates, confusing affordability checks, and oh joy, house prices that seem to have their own minds. So, where do first-time buyers even start in a market like this? Reality check. It's not all doom and gloom. Yes, interest rates have been bumping around like a dodgy shopping trolley. And yes, the average deposit looks more like a small inheritance than your regular savings pot. But there are cracks of light. For starters, more properties are coming onto the market in 2025. Landlords are offloading portfolios, thanks to tighter EPC rules and tax changes, and that means more starter homes hitting Rightmove. I'm seeing it daily in the field. Flats that were once snapped up by investors are now being offered to genuine first-time buyers, often at a more negotiable price. Just last week, I showed a one-bedroom flat in Croydon. 3 years ago, it would have gone to a cash buyer in 24 hours. This time, it stayed on the market long enough for my first-time buyer couple, school teacher and NHS nurse, to get their mortgage sorted and make an offer. Boom. Offer accepted. Happy tears all round. So what's actually helping first-time buyers right now? Here's the scoop. Mortgage innovation. 2025 is seeing more lenders return to 95% LTV products, and even a few brave ones offering 100% no-deposit deals again, though with strict affordability checks mind. Builder incentives. New build developers are getting creative. Think 5% gifted deposits, help with legal fees, and even free furniture packages. Yep, I had one client walk into their flat with a fully kitted kitchen and Netflix-ready lounge. Family boost schemes, still popular. A lot of my clients are using bank of mom and dad top-ups or joint borrower sole proprietor mortgages. One client's parents added themselves to the mortgage to boost affordability, and they didn't even have to move in. Thank goodness. Here's what's catching people out. Now, I've got to say, some folks are making the same mistakes I saw 10 years ago, and it stings to watch. Chasing shiny unicorns, that perfect flat with sea views, 5 minutes from the station and under budget, probably doesn't exist. Set realistic goals first, then be pleasantly surprised later. Waiting for prices to fall. Look, nobody has a crystal ball. And while we may see minor dips, the real question is, can you afford it now? Because if yes, waiting might cost you more in rent and lost equity. Underestimating the process. It's not just finding a property and clicking buy. You'll need brokers, solicitors, surveys, and so much patience. A quick story, because you'll love this. I once had a buyer who fell in love with a flat in Tooting. It was quirky, had a spiral staircase, and, bless her, it reminded her of her grandma's house. She went full hard overhead and ignored the damp patch in the corner. Survey came back with a big fat red flag. Structural issues. Tears, panic, calls to mom. But instead of walking away entirely, she pivoted. Found a Victorian conversion up the road. No spiral stairs, but a south-facing garden instead. 2 years later, she's gained nearly $40K in equity and just got a dog named Hugo. Moral of the story? Stay open-minded and roll with the punches. Final little hacks from the trenches: get your AIP before you even start viewing. Sellers love a buyer who's ready to go. It's like dating with your life together. Very attractive. Use a broker. The good ones, and I know a few diamonds, can find deals that high street banks won't even tell you about. View everything, even the ugly ducklings. Some of the best buys I've seen didn't photograph well. One had a wallpapered ceiling. Honestly, 2025 isn't the easiest year to buy your first home, but it's also not the worst. The key? Stay sharp, stay realistic, and get advice from people who are knee-deep in the market every single day. Hi, that's me.